Welcome back to another episode of Adventures in Business. This is your host, Amy Zander, and I am flying solo today. Lisa is out and about having fun, and I'm sure she'll be right back with us next week. But I'm going to just dive right into our guest. Super excited to meet and learn more about Kyle Leemon with Churchill Mortgage. How you doing, Kyle?
I'm doing great, Amy. Thank you.
Yeah, great. It's great to have you here. So I know Lisa usually does the introduction, but we're just going to have you tell our listeners who you are and what you do.
Great. Well, my name is Kyle Leemon, and I am a loan officer with Churchill Mortgage in Okemos. I started with Churchill back in 2015, and yeah, it's a really fun industry to be in. The thing that we really help people with is helping align their mortgage with their financial goals, and what I say is helping them build their financial legacy. So it's a really fun line of work to be in, and that's what I do, and I'll kind of get more into that later on.
Yeah, so you're with people in kind of the 11th hour of buying a house, right? So they found the house they want, they've gotten pre-approved and all that stuff, and then you're the one that does the mortgage transaction, right?
Yes.
Okay.
Yep. And ideally, people will come to us real early on in the process at really whatever point that they start to think about what does home ownership look like, or what does it look like when we're moving into our next house, whatever that might be. We want to be there for them to really just kind of get any kind of questions answered, so that way they're not making a last minute decision. And then it also just sets the expectations correctly, because the mortgage markets and industry has changed over time. Even from the last 10 years, it's changed a lot. So if somebody hasn't bought a house, maybe if they've lived in their house for 10, 15 years, this next experience could be quite a bit different. So
Right.
getting in contact with us or your mortgage lender is really important really soon in the process.
Yeah, so the first step is getting pre-approved to see what kind of financial range that you can start looking at houses, right?
Yes.
Yeah.
Yep. And there's a big difference between lenders and realtors alike. Will use these terms interchangeably. There's pre-qualification and then there's pre-approval. So pre-qualification is really a basic conversation that a lender might be having, where we're just talking about credit, talking about income, kind of getting an idea of what you're looking for. And a buyer can shop with a pre-qualification letter. I don't do pre-qualifications because it's putting people's money at risk too much. Just because if you use the pre-qualification and not understanding what that actually means, you might get under contract on a house, and then an underwriter might say this doesn't work because, or when we know that when we've got the documentation at the very beginning of the process, we'll know that this just doesn't work. And you might have put money down as an earnest deposit, you paid for inspections, maybe you've even gotten to the point where you've ordered an appraisal. So some of that money you're not going to get back if you've paid it. So I always recommend for people to do a full pre-approval, which it doesn't cost anything. It shouldn't really have any kind of effect on a credit report, but it is a much more detailed conversation of and having the documentation. I like to have pay stubs, credit report, maybe bank statements, depending on the buyer situation. Maybe there's tax returns involved as well. I try to gather everything that I know that I'm going to need in order to get the findings that we want from the lending institution that we're looking for: Fannie Mae, Freddie Mac, Rural Development, VA, stuff like that.
Right. Yeah, and there are a lot of mortgage programs, I guess would be maybe the right word, like for veterans. There's ones for low income people and different things like that. So I think the whole pre-approval process is also an educational time for people to learn what is out there, what they might be able to tap into some of those programs or things that are out there that they might not have known about. So it might
Yes.
change what they can afford.
It definitely
Yeah.
can. The more time that you have to plan up front, it might be a situation where you think that conventional is the only way to go, and then it opens up the opportunity for VA, or like you say, a down payment assistance program,
Hmm.
or one of the many others that are out there. Proper planning really can save you a lot of money from the opportunity cost of just the product that you didn't know was available.
Right. Well, so talk a little bit about the housing market right now.
Yeah, the housing market is pretty crazy. It was it's kind of funny because one of the frustrations that we have is what the media, the news is trying to do is in terms of trying to instill that fear that the housing prices are so high, and that gets people to sit on the sidelines and wait. What they're not recognizing is that there's a lot of factors that go into supply and demand, where when you look at the historical trends, we're in a situation where we have a very low housing supply and a very high housing demand. One of the things that we've been doing is we do these state of the market events that we put on, and in there we talk about that, what the differences are between 2008 and 9 and where we are today. So we're in a situation where we have a lot more demand and a lot less supply than what we had even in 2008 and 9. So what people are thinking is that a recession's coming and I'm going to be able to get a house at a great deal and the interest rates are going to fall. It couldn't be further from the truth, because with supply and demand playing into this, there's so many people they're sitting on the sidelines, but they're also starting to realize that these home prices aren't coming down. They started to come down a little bit, but now they've started to go back up. Not at the appreciation rates that they have in 2021 and 2022, but they're probably going to be back to averages somewhere in the 3 to 4% appreciation throughout Michigan, and Greater Lansing area is right around there as well. So the housing market is crazy. There's one client that we had where they put an offer in, and this was just a month ago. 27 offers on a house in Lansing, and it's hard to get your offer to stand, apart from all of the other floods of offers that are coming in. So I think that's where working with a local lender and just having all of your ducks in a row is really important as a home buyer.
Right. Do you have any tips on how to get your offer to stand out?
Yes, something that we do is we kind of call it that we're playing the game that no other lenders playing. So first, it starts with that full pre-approval, and that just allows us to give an honest, genuine pre-approval letter that we know that's going to get to the closing table. With that, sometimes we'll also do, Churchill has a couple different programs. One is called Certified Home Buyer. So there's a couple different levels of pre-approval. If somebody's, let's say they're salaried, they've got strong credit, there's really nothing that stands out on their file that would be any kind of concern, then a general pre-approval will be fine, depending on what your timeline is. To go a step farther than that, we have a program called Certified Home Buyer, which is where we send a full file into our underwriter. It takes a little bit longer, maybe a week. It still doesn't cost anything, but it allows the underwriter to review every single document that you turn in. And really the only thing that we can't approve at that time is title work and an appraisal, because we don't have a property at that time.
Right.
But that is the strongest pre-approval that you can get industry-wide. And then what we also do is once somebody's certified, then we can lock in an interest rate ahead of time where it really is, it's a win-win. There's no drawback of doing it. So it hedges you against any kind of market fluctuations where if the interest rates went higher at the time that you buy a house, within 90 days of doing that.
Okay, 90 days.
But with that, if the interest rates fall at the time that you are under contract on a house, then we get to go to whatever that lower interest rate is. But if they've gone higher, then we get to honor whatever interest rate that we were able to lock in at the time that we initiated it.
Wow. Doesn't sound like there's any reason to not try to do this.
There really isn't.
Right.
It's kind of surprising because we put it out there for every person that we're talking to that if you want to, you can do this program. A lot of them just, for whatever reason, don't do it. But there's no cost to it. There's really no drawback.
Because you've got to submit all of that stuff anyway before you buy a house. So if you do it sooner up front and get that certification and all that, then a lot of the heavy lifting is done anyway. So by the time you find the house and make the offer, the rest of it goes smoothly. It's stuff you've got to do anyway.
Yes. And we'll have to get updated documents throughout the process. Pay stubs expired,
sure,
expire, but then it just really reduces that amount of stress of when you're in the heat of the moment and you've got a closing date in mind, you've already put down money. Then when we're asking for updated documents, my impression is that it should bring down the stress when we're asking for those documents, because you know that all of these larger things that could have been there, they've already been reviewed and approved from
Right. Yeah, it's not fun when you have something that pops up unexpectedly, right at the end of something. That happened to me. The first house that I bought, I was 22 when I bought my first house, and pretty young. My mom was helping me through the process, and right at the end, there was like an unpaid medical bill, and it
Mm.
was like less than $100. It wasn't even that much money, and I was still under my parents' insurance, so I didn't take care of it, and I had to go like to the medical facility and pay the bill, and then come back with a receipt and all that stuff, and I was just like freaking out because I was like, is this stupid bill going to keep me from buying my house? It didn't, but it would have been nice if I hadn't had to deal with that, like, the day before my closing.
Right.
So
Those are stressful points. I
yeah.
can absolutely see that, and I'm sorry that you had to go through that.
Oh, it was a learning experience, especially, being that age and whatever. It was fine.
Sure. Well,
But
that's good.
yeah, yeah, it was
One
a
other
good
thing on that too that kind of is setting your offer apart. So actually, two things that we add into it. After we've got the certified home buyer done and the rate secured, then we also do this thing where I don't know of any other. I think a couple lenders are doing it, but not what Churchill's doing here. Is we have this thing called a seller guarantee, and I think this one's called Churchill Edge. It's all part of the whole package. Churchill will back that certified home buyer offer with a $5,000 seller guarantee. So basically, when we submit a pre-approval letter with an offer, then we're telling that buyer or that seller that if this falls through for whatever reason outside of the appraisal has issues or the appraisal comes in really low, if there's any reason why our buyer's file fell through, we're going to pay the seller $5,000 just to make
wow.
sure that we're setting our offer apart and that
Hmm.
these pre-approvals that we're given are valid.
Yeah.
So that has been really helpful, along with a phone call from me out to the list agent and just putting in a good word for our buyer's file that, if there's, they've been great to work with. They've turned in everything. I really want to explain the process that our buyer has taken that sets them apart from just another offer that might not have gone through anything like that.
Hmm. Yeah. I think that's really, really important right now. And like you said, there's 27 offers or something like that
Yes.
on one house. And how as a person selling a house, how do you even weed through all that? And you think, oh, well, the top dollar is going to be it. That's not always the case because there's all these other
Right.
factors, and you don't want to just accept the top dollar and then have that fall through. Yeah.
Correct.
Right.
Yep. But my wife and I kind of went through the same thing when we were buying a house just in December and when we were selling our house. So when the offers came in, one of the things that really stood out to us that we actually went with it on is there was a really nice heartfelt letter of what their intentions were of which I know not all realtors like that. Sometimes you want to keep the emotions out of it and just let the business do business on getting an offer accepted.
Hmm.
But I think in today's market, like I said, you've got to play a game that nobody else is playing and make your offer stand out a little bit more.
Right. So you got a letter from the potential buyers saying like their story and why they wanted your house and all that.
Exactly.
Ah,
It,
that would
it
totally affect me.
oh yeah. Yeah, they talked about how where
Yeah.
they visioned their kids sitting in this corner
Oh.
reading books, and it was just it actually got us kind of teary eyed.
Yeah.
It was pulling at the heartstrings.
Right. Yeah, buying and selling houses can be really emotional because people build their lives around that space and thinking about
Yes.
leaving. And yeah, that's a big deal. It's
Yep.
gotta be so satisfying for you too, especially, I mean, working with anybody, but maybe people buying their first house, especially if they've had trouble getting the money or they've been in a rental situation for a long time, they've struggled really hard to get their credit up, they've
Mhm.
done all the things, and then they can finally afford their first house. That must be a really cool experience to help them do that.
It is. We love working with all clients, especially the ones that trust us. And the first time home buyers, they're really fun to work with because you are building, you're really taking that next step with them,
Mhm.
helping them build their financial legacy, whatever that looks like to them.
Right.
Everybody has a different end goal in mind, and but that's what's really fun is that what the conversations that we're having with people, we're understanding what's most important to them
Mhm.
about this next home. Sometimes it's keeping the payment down, so it's more affordable than renting.
Mhm.
Sometimes it's I want to use this house to build as much equity and then transfer it to the next house so I don't have to have another mortgage on the next house or whatever their goal is. It's so much fun to learn that and then help them put that puzzle together to align that mortgage with their goals appropriately. And the educational aspect of it, we do the first phone call that I do, that's really to kind of get an idea of what their goals are from a real high overview perspective. And then we do a home finance consultation, which is all about the mortgage education, setting expectations up front, just so that they know what they're going
With
to
the process. Yeah.
Exactly. And then from there, once I have a house under contract, that's where I go back to that first phone call and then really fine tooth everything into what does the market look like at this day? What's the payment on this house? Does it make sense to use discount points? Should you go with a little bit different down payment? There's so many different ways that aligning that mortgage with their goals really is going to help them save the most money long term, all things considered.
Right. So let's talk about interest rates for a moment, because this is such an interesting. Hold on one second. Okay. Make sure my computer's plugged in. So interest rates to me is so interesting because this is the way that I look at it. You can tell me if I'm wrong, but people get really crazy over like a point one way or the other.
Mm-hmm.
And I know like a few years ago, maybe pre-pandemic, it was like 3-4%. Now we're up a little bit higher. I'm not sure what is it today? What's the rate today?
Yeah, and I have to be careful just because licensing and everything. But
sure, but it's more than like 3% right now.
Oh,
right?
Absolutely.
Okay.
Yes.
All right. So,
no,
go ahead.
I think it could be valid that a lender could quote anywhere from high fives to mid sevens. There's so many factors that go into interest rates.
Right.
But because technically we're supposed to quote an APR and all of this other stuff.
I can appreciate that. Yeah.
From a general standpoint, just so people have an idea, what should I be expecting? Mm-hmm. It could be anywhere in there. And the bond market for mortgage-backed securities is constantly moving up and down, just like the stock market.
Right.
So, and there's no rhyme or reason to it other than what investors are really predicting where the market's going to be at. So it's all very market-based. But there's so many things that go into an interest rate where you could have your coworker who has the exact same job as you could have a totally different interest rate. And the house that they're buying could be right next to the house that you're buying.
Yeah. Well, it's your credit score and things like that, affected, just like buying a car, which is, different. But here was the point I was going to make is people get crazy about the interest rates on their houses. Like I was saying, 1 point, 1.5 points, one way or the other, but they're willing to have a credit card at like 20% interest. What? It's like, why is that okay? And you don't really think about that credit card payment, but your house, you're going to like dicker over 0.5%. I just think that's interesting to me. Like, I mean, I know you want the lowest interest rate always with whatever you're buying and things like that. But I always, I think you can refinance too. Like that, that's the other thing. That's always an option, a year down the road or whatever, when the interest rates fall again, just refinance. Like I just think it's so funny. You must deal with that a lot.
It's such a good point because we're running credit reports on everybody that is moving forward with us. And that's such a good point because everybody does want the lowest interest rate, which that is the goal. And you're so right that the credit card interest is, when you look at that, of there's $15,000, $20,000, $30,000, $40,000 of credit card debt at 10% is an extremely low credit card interest rate. Most of those are at 18 to 25. It is kind of crazy, but the interest rate on a mortgage, when you're looking at that as something that is typically an appreciating asset, especially when you're looking at the long run, you're building wealth through it. It is a financial tool. It's not going to just be a free way to build all this equity. You want to make sure that the loan that you're using and the goals that you have, how you're paying that back, is working really well with that interest rate given the time. And like you said, you can refinance it anytime that the markets are better, which you don't always want to refinance just because the interest rate's better. You really want to make sure that, because you got to factor in your closing costs, how long you intend on still owning that house, how you've been paying that mortgage back, what are you going to do with those savings if you do refinance. Sometimes we'll look at people's overall financial situation and say, if you do refinance, I would take advantage of these savings, the lower payment that you'll get. And there can be several reasons why you're getting a lower payment. One, it can be because of the interest rate, but two, something that a lot of people aren't factoring in is they're taking a debt that, let's say they've been in a house for 5 years on a 30-year mortgage. Now you're down to 25 years left on that mortgage if you pay nothing but the minimum monthly payment. By refinancing, you're spreading that back out to 30 years. So you want to make sure that you're not losing that 5 years by just saying, hey, I'm saving $200 on my monthly payment.
Right.
Use that appropriately. Either put that right back into that payment. Now you're down to 22 years on your mortgage, or pay off those credit cards. So
100%. Yep. Yeah. So how long have you been doing this, Kyle?
Yeah, so I got into mortgage lending in 2015. Before that, I worked in public accounting. So there's a CPA firm in Kalamazoo that I worked at, and I wasn't a CPA. I was just on the audit and tax teams. And one of the things that I was helping with was the audits for banks and credit unions and their lending departments in particular. And it was really fun to go out there after a couple of years and just seeing what people are doing, the lenders are doing. And it seemed like a really fun industry to be in, where they're meeting directly with their clients, they're helping people, they're putting these financial puzzles together. So that's kind of what sparked the interest. And then in 2015, listening to Dave Ramsey on a podcast, he recommended Churchill, and that's kind of how I found it, that if Dave Ramsey recommends, it's probably a pretty good place to look into. And Churchill was the mortgage company that promised me the least. And I really think set expectations the best for me, that this isn't an easy job. It's the tasks that you have to do are theoretically easy, but getting everything done is not. And that to me just meant a lot, that they were being completely honest in the interview. And I said yes to them. And so I started at Churchill in 2015. I did make a move for a year and a half. I went over and managed a mortgage office of a credit union, and it was great. It was really good to see a completely different perspective of how everything is honestly the same, but it's also just different based on the culture of the company that you're working with. And I was more in a management position. I was doing my own loan production as well, but I was in the management position, leading other salespeople, and my heart just wasn't in it anymore. So I said, either I'm going to do something else or come back to Churchill. And I came back in late 2020, and I love it. It's such a fun company and industry to be in.
I love the picture on your website with is that your son looking at the Dave Ramsey magazine?
Yeah.
So cute. I love it. Yeah.
Yeah. I've taught the financial peace course at our church, and it's really fun. There's certainly things that I might not follow to the T with Dave Ramsey, but I think Dave Ramsey's message is great for the general masses. If everybody has a good idea of what Dave's talking about, then I think it just helps people be that much more well-rounded in their finances.
Yeah. I think financial education is key for everybody. They don't teach a lot of that in high school or college unless that's your major.
Right.
So
I'd love to see that come back.
Absolutely. Like just balancing a checkbook, or, money going in versus money coming out, stuff like that. It's
Right.
important to know those things. Absolutely. I was lucky I had parents that taught me that, which is why I was able to buy a house at 22. And then when I sold that house about 5 years later, I paid off all my debt. I was debt free.
That is awesome. Congratulations.
I was able to pay the remainder of my student loans. I had a small credit card, paid my car off, and it was awesome.
Okay.
So yeah.
Nice.
It was good. I can't say that now. I'm not completely debt free now.
Okay.
So, like a couple decades later, but still good. We have a good house.
Yeah.
So yeah. Yeah. So this sounds like a great program that you guys have with the pre-approval, the certified buyer, the guarantee, the lock-in on the interest rate. That's all amazing things. So yeah. So tell our listeners if they want to get how to get a hold of you.
Yeah, they can visit our website just by Googling Kyle Leemon, and last name spelled Leemon. And then I always encourage people, check out our reviews. Those are unbiased. We're not out actively seeking reviews. We do have that third-party service that is sending them out after a closing, but we're not trying to get people to inflate our reviews. I think getting an idea of who you're working with and just seeing what kind of past experiences that they've had is really important. But yeah, just Googling my name and you'll see it on there. But Churchill Mortgage in Okemos, they can call us, email us. But
Yeah.
whatever way works best, we're happy to be there for them.
All right. And of course, for our listeners, as always, we'll have the links to everything in our show notes for this episode, so you can find it there. So if you're driving and listening to this, no worries, you can find it later. Yeah, absolutely. So Kyle, is there anything that we didn't talk about that you want to tell our listeners before we wrap up?
Yeah, I think really what my purpose is in this business is to honor two commitments that I have outside of work, and that's my faith and family. Those are the two most important things to me, and I'm really fortunate to have my wife Nicole, and we have, like you mentioned, our son Peter, who's 2.5, and then we have Amelia now as well, which I don't know if I have a picture on there. She's 8 weeks old, and
wow, brand new baby.
Yes, she is. Yep. So we're so blessed to just have the opportunities and everything that we do, and what I always kind of keep in the back of my mind is the better job that I can do here, the better that I can serve my clients, then hopefully that brings success in that sense, to allow me to honor those two commitments outside of work. So that's really what I'm all about. And it is a passion of mine to make sure that people are having a good experience. If you work with enough people, you're going to work with people that are just not having a good experience. Something's going to fall through the cracks. And I really do take that to heart. I'll lose sleep over it. I want my clients to have a good process. So,
well, it sounds like you guys have a really good product that you're offering there, and it sounds like you have a good work environment too that you really like. So,
we do. It's amazing. I love it.
That's great. Well, I know that it's a crazy housing market out there, but if you're thinking about selling or buying, I highly recommend that you check out Churchill Mortgage in Okemos. And again, we'll have the links and all that in our show notes for this episode. And Kyle Leemon is the guy for you to contact. So Kyle, this has been great getting to know you. I really appreciate you being on the show. And I wish you the best of luck with what you're doing. It sounds like you've got a great thing going, beautiful family. And we just appreciate you being on the show.
Thank you. I appreciate the opportunity.
Yeah, absolutely. And thank you to our listeners for tuning in to another Adventures in Business. We appreciate you as well. We release new episodes every Wednesday. You can find them at zediamedia.com or wherever you listen to your podcasts. And don't forget to check out our YouTube channel, Adventures in Business, as well. If you'd like to be a guest on our show, you can also sign up at zediamedia.com. Thank you so much. Have a great day. And as always, go out and make it an adventure.